Hello, everyone. Welcome to a special series of Men on a Mission called On the Ground. This is a very special one because we are doing in view of the unprecedented shifts in the world. Everyone is talking about the US tariffs, and some countries are coming up to retaliate with their tariffs systems as well. So we are going to do this unique episode where we are featuring Ang Yuit, President of Association of Small and Medium Enterprises, to share with us what are some on-the-ground insights and takeaways that Singapore businesses can adopt, right, so that we are able to prepare for the future. My name is Tammy, and I'm here with my co-host Adeline.
Thanks, Demi. Well, in the last few weeks, I'm sure all of us have been watching the very surreal series of events, right? From US tariffs that started with Canada, then China, Vietnam, Cambodia, all their close neighbors, and then the other countries, to the announcements on Liberation Day with the universal 10% trade tariffs and sectorial tariffs as well. And right now, we are in the 90 days kind of pause where everyone mostly is in the 10% universal tariff, with the exception of China at 125%, which now I understand has gone up to 145%. Right. So Singapore goods or Singapore hasn't been spared as well, which is quite surprisingly, I think, on a global kind of basis, given our long-standing free trade agreement. Right. Of course, on paper, Singapore's export to the US may not be very massive compared to other trade partners, but the symbolic weight and strategic implications of the tariffs are much deeper. So there's of course an immediate impact on export focused industries, but the truth is the ripple effect is going to be much further, and Singapore SMEs across sectors will also be affected. So in today's episode, we are going to be asking and investigating with Yut, right? How should Singapore SME businesses be responding, and what's the way forward from here?
Mm. Yue, first question to you. I mean, of course, you are already interviewed on a lot of news and media outlets. A different perspective that you could share with us is, did you expect this to happen?
The tariff was very deep and very wide ranging. And while we thought that some of it may be implemented, definitely not this level of intensity and this level of breadth and depth. No, it wasn't something I expected at all.
Mm. Could you walk us through on a more macro level, what does this look like for Singapore and our neighboring countries?
I think that now there's a pause, right? So immediately the direct impact around the neighboring country is pretty much even. All of us have 10%. I think the big challenge is that everyone is going to ask themselves what are we going to do during the pause and what happens after the pause. Maybe the pause will continue indefinitely or it may come back. The question is that do we trust the underlying trading system and our trading partners anymore going forward? And I think that's the biggest impact of this in the longer run. People are no longer going to look at US as a reliable trading partner, and people will look at maybe turning to what is closer to them within their own economic blocks. So Europe will turn to European Union and strengthen their neighboring connectivity. And in Southeast Asia, our ASEAN ministers just met, and you can tell immediately that there is a banding together effect where people just get closer. And if you meet a Malaysian or Filipino, I'm sure if you keep at the back of your head the ongoing tariff war, you will immediately instinctively feel a closer connection to your neighbors. So naturally, it's going to spur more regional connectivity and maybe even stronger regional partnerships. And as we turn away from relying on the status quo, what's given us this live environment for the last 60 years, right?
Mm. So what you're saying actually is it's not so much of the immediate tariff impacts, but we are actually looking at a almost structural change in terms of how we view our trade and how the entire world system is going to be.
Yeah, fundamentally, in the short run, unless you are dealing with US and China trade, you are not going to be immediately impacted for most of us. Some cases, because of the immediate 10% tariff, there's going to be movement of goods, concerns, and so on. But by and large, most of us will not have any immediate effect and impact.
I saw recently our Prime Minister, Lawrence Wong, actually created a post that say, these are not the actions of a friend. Right,
Yes.
so I thought that was a brilliant one and it kind of went viral, right? So in a way, I think this definition of friend is changing, right? Last time it used to be very friendly in trade when it comes to, of course, US, China, so on and so forth. And now the affected party being China, and of course they are the market of the world, right? How do you think they will affect us and the ASEAN region?
I think that the impact is going to be multiple levels and multiple time frames and different actors. The actions of what US has done immediately, of course, impacts you if you are involved in trading or manufacturing in China and dealing with US-China trade. That's immediate. I have friends that have cargo on the way to the US that they have to deal with how going to bear or split costs. Cargo that gets prevented from shipping because the customer say, "Hey, hold, I don't want it now. Now that's so expensive."
Mm,
So broadly, that's one level. The second one is, of course, if you are manufacturing in the region, and some cases are relying on China plus one, right? And
mm,
in the China plus one, the plus one country then are relying on that for trade. You may want to reconsider that because the China plus one strategy is something that the US has been targeting, right? Even though there's a pause now, that strategy may be at risk when the pause ends or if things change. The third one is if you are in domestic, you're concerned about price economy slowdown as the system kind of global system starts to split into two kind of broad trading system, right? US and
mm,
then you have China and its own. The challenge for many of us, apart from just concern about slowdown and cost, is the change of your markets. In these kind of turbulent times and these kind of reconfiguration situations, what you've got right now is the whole trading system is being reconfigured. Suppliers, your manufacturers are going to become your competitors, going to become maybe your customers. All of that's going to change. Now, in this kind of
mm,
situation, your existing market very likely would disappear or change, and new markets will come up. That means that you cannot assume that your current revenue streams and your current customers will stay on as your current customers in 6 or 12 months' time. So you gotta be really very careful and be aware of what's going on. At the same time, there's gonna be new
mm,
opportunities that if you are not on your toes, you won't get it. You'll miss the boat. You would think that, oh, I've gotta, keep to my business model. Now's the time to really be ready to flip your business model on its head when you see the opportunity. So many of us have to be really clear about this, right? Now, lastly, because of the reconfiguration of the trading system, you're going to get a lot of companies, even more so. We already had quite a lot coming in the last 3-4 years, right? But even more so
mm,
coming to Singapore and using Singapore as a launchpad into Southeast Asia. If you look at the global uh, markets in general, you have Europe as one, you have maybe North Asia, you have South Asia, you have Southeast Asia, you have North America, South America. These are broadly, and then of course you have Africa, right, and Middle East. So you broadly have about 8 to 10 broad markets, and the Southeast Asia is one that's increasingly being looked at because of its stability, of its growing size, young population, and Singapore is a springboard to Southeast Asia. So for any company that is questioning, hey, if US is not going to be a place for me to sell, let's look at Southeast Asia. They're going to land in Singapore. And when they land in Singapore, they're going to open up a shop. Why not? And then they're going to start competing with the locals, even if that's not their intention. And when that happens, you would get that kind of market shift that I was talking about, that your market will disappear. If your upstream supplier gets replaced by a foreign company.
There's a lot of ideas to unpack here, but I think I want to go straight into the consequences of Singapore's market in general. In the last episode of Men on Mission, we actually talked about this already, right? How there's a lot of China franchises setting up in Singapore and expanding, stealing markets. I'll call it stealing because they come with the entire value chain. There's no way you can partner with them, right? And then bring all their products and services to the Southeast Asia region, right? So in this scenario, especially where now the US tariff is going to escalate, right, or even accelerate their move in Singapore to Southeast Asia, what are some opportunities that you see personally that we can go into in order to capture this wave?
Yeah, continuingly, right? As companies come in, they have different companies, different countries, different industry have their market penetration approach. And by and large, we see, for example, for China companies, they bring the whole value chain and supply chain in, right? That is one favored market penetration approach. But that may change. And increasingly, as more of them come, let's say, because driven by the fact that US no longer is buying, you may find opportunities, and definitely you will find opportunities to partner and look at where the gaps are. And China is a very huge market. There are many companies that are still not international, are still stuck in the domestic market. In fact, the last stat I got was maybe only between 1 to 3% has internationalized. The 97 are still, 97% still based in China. So there's going to be a lot of opportunities that will show up only if you are on the lookout. And that's the most critical. And you got to get out of your comfort zone, go and meet people, speak to people, suss out where opportunities are. Because no one knows, right, until you go and look. And that's where you can find.
Is there a way or platform or the how that we can meet domestic brand owners in China to bridge that gap?
Yeah, I think broadly from the association, various trade associations all have some form of ability to bring networks together. So for example, in the Association of Small and Medium Enterprises, ASME, right, we are organizing, having an action group around internationalization, both inbound and outbound. And we want to run events where people come in and meet each other, meet other countries, foreign companies that landed in Singapore, have set foot on our soil, and figure out how to get the companies to work together better. So that's just an example.
I think previously also during our episodes previously we mentioned like it's an imperative almost for Singapore companies as well to really look at going international and going out of Singapore. Is that take still the same? Is it even more pressing? What's your take on that?
Yeah, I think that fundamentally we have to look at expanding our markets, right? So expanding markets either mean that in local environment you find a new market that you have not previously managed to attack or access, or you go international. So in these times, because of increased competition and also increased pressure, right, for optimized cost and more and different market opportunities, it's even more important that we keep a lookout. And having the international option gives us that additional choice, and then gives you more chances to compare what is workable for you as you explore while trying to maintain the existing market that you have.
Are there any sectorial priorities when it comes to how badly impacted they will be? For example, do you look at, oh, manufacturing is going to be the most impacted, that's number one. And where is it on the scale right now for the other sectors?
I think it's hard to say broadly as you look at the second, third, fourth order effects, right? The first order primarily is looking at a lot of cases is manufactured because that's where China's strength is manufacturing. But downstream, I think a lot of industries can be impacted. Um, for example, if China feels that the local economy is no good, you're going to have a lot more companies that are coming out, for example, in F&B that you have seen. And
Mm.
it's not just the F&B that will be impacted because when a local F&B chain or a company closes their door, all the companies that used to work with them, service them, provide consulting, marketing services, all of that is going to be impacted. The supply chain that used to supply goods that they used to order is going to be impacted. So there's a lot of ripple effects across. So it's hard to say because a lot of these kind of situations are where our fates are all intertwined, and when one goes, others would get impacted.
What about service industries? Because it still mostly sounds more product based because it's a lot of import export. What about service industry in general?
Yes, services are definitely impacted. So if you look at this year alone, right, even before the tariffs, I think that many services already experiencing a slowdown. And then you ask, why is that the case, right? Well, a large part of it is because there's a significant sector of our economy that has slowed down. Food and beverage, retail, even tourism, right? Some facets of tourism that's not exhibition, not conventions, is slowed. And all the services industry that used to support them, whether you're doing sales consulting, digital marketing, or accounting, right? All of that will be impacted. So services are definitely the next in line when the primary industry gets interrupted.
A follow-up question to service then, right, would be because of course as service business we are more industry agnostic. So yes, while events and exhibition or F&B would slow down, right, what do you think are good pivotal industries that service businesses can look at in order to increase their sales volume again?
I think that depending on how the disruption happens, right? One of them is actually to build from a macro perspective, look at how when there's an influx of companies coming in that's using Singapore as a springboard, how do you as a service company then leverage on the needs of these companies that are looking at springboarding to the rest of Asia? And through that, I think you may have some ideas and some directions if you are trying to service this group of people.
Personally, coming from a marketing service background as well, I do have some doubts about, using our Singapore landscape springboard because if I look at international companies, a lot of MNC companies are using Malaysia, right, for marketing services. Of course, because they are very nearby to Singapore. So in terms of the cultural context, it's not too far. Plus, you talk about the cost of it is 3 times lower, right? Just based on currency alone. So I do see last year there was a shift where a lot of Malaysian based agencies are growing, but Singapore agencies that are hiring Malaysians are shrinking. So I don't know if this is some anecdotal story that I have in my head right now,
Yeah.
but what is your take on this?
I think that it is a good point. And I suspect that, firstly, Singapore companies are continually being squeezed in terms of cost structure, right? And then you have your local market that is shrinking. So that's fundamentally what's happening, right? Now, Malaysia's case, their cost, although it's not cheap, they are not being pressed as hard as Singapore companies in terms of cost base, right? And then when there are companies landing, there's a bit more space where if I have foreign companies coming in, it may not immediately edge out the locals because literally there's more space, right, for one. So rentals wouldn't immediately shoot up. You're not competing and you won't lose rental space. So the impact to the local businesses are not as immediate. And I hear that there is impact. So in that sense, the ripple effect doesn't happen as fast because the market is much larger and it can take in more shocks, right? Now, if that's the case when companies come in and because market is bigger, you potentially would have a uptick in demand because the local companies may fight and counter the incoming ones, right? And they may say, oh, I need to spend more on marketing. Whereas in our case, the P&L is just so tight, right? That a bit you tip you over and you just go under, right? So I suspect that that's one area. But the broader partner is that as your advantage as a services company, let's say if you're in marketing, it's not gonna be that you know your craft. So if you are a marketing company that's always done business in Singapore, you are not going to naturally have the advantage in that sense because your competency is just restricted here, right? But because you are Singaporean and you are ASEAN, it's not hard for you to establish links across the region. And then when there are others that come in, you can quickly provide that kind of service or that kind of consulting to help them bridge that. But that requires you to invest a bit, requires you to understand the different dimension to your business. So without having that research and having that basis for that dimension, right, you are not going to be ready. So when we say we want to take advantage of this potential, it does mean that you sometimes, in some cases, would have to get on the ground first, understand where these directions are, run ahead, do your research, prepare, and then test the market when they come in. Hey, I've got this service. What do you think?
So it sounds like right now, in a sense, we should be taking opportunity right now at the 90 days pause, which we don't know if it will last 90 days, right? To really try things and be on that fluidity level of saying that we need to now see beyond what we are doing, test new things, and quickly pivot if necessary.
Yeah, and I think it's very important that as businesses, we keep our ears open. That means attend these events, attend the networking, listen to what other companies are doing, listen to where the industry is headed. Because it's so critical because you need to get your own data. And without taking the data in, without synthesizing it, it's going to be really hard for you to plan ahead and take active steps. So when you start doing that, you then would be able to take that advantage that will show up when market shifts, which is shifting, right? So what are you actually doing to prepare yourself actively right now?
Last segment I want to talk about is the value of Singapore's branding, right? Of course, now that we are a lot more non-resistant to shocks because we have a smaller market and we don't have that cushion, right? And of course, now we become an area where all the different countries will land here, trade here, merge and acquire, and then go elsewhere and things like that, right? So what do you think would be the value of Singapore brands moving forward from here?
I think the value of Singapore brands are that we are still trusted, right? Fundamentally, we are well trusted. We are a good, trustworthy brand as a country and as Singaporeans. So if we are willing to put ourselves out there, take some risks, I think our brand would support us as a Singapore Inc. in that.
Do you feel that Singapore is still a port for Southeast Asia, or will that change?
I think that we will still be a port for Southeast Asia, but there will be other landing points. Even in the old days, you have Singapore, but you also had Malacca, you had Penang, you had Batavia, which I think is Jakarta now, right? So, but we would still be a number one, number two port in the world. Sorry, at least Southeast Asia.
And I wanted to ask as well, I mean, in terms of ASME, right? What what should business owners be looking out in order to help themselves be ready for this climate that we're facing right now, how does ASME come in?
First, of course, at the basic level, we are organizing events, we are getting speakers in so that we can share that data, we are doing surveys, all of that baseline. But on top of that, we set up a internationalization action group. The objective of the group is to band businesses together, look at opportunities and landing points in other countries, look at how to give SMEs the least investment approach and pathways to be able to look at whether the other market is suitable for them, test the water, and then expand if necessary, and creating all these different landing points across Southeast Asia. Also leveling up the skills and capability of SMEs around the area about coming together, joint venture, what's the legal structure. All of that, right, are things that we are currently underway doing.
So in your vision, do you feel because of the internationalization and the landing points, do you feel that now it's ever so simple for a Singaporean to maybe have a M&A with a Cambodian company and tackle MNC brands together? Is that how you look at things?
I think that M&A is going to be a very far goal because there's going to be a lot of process along the way. But starting with just joint venture alliance, I think that's a great way to start, and have many joint ventures alliance just to test out how the regional markets are. Cultural fit is a big difference, and being able to understand that and being able to adapt to people's culture in itself is a great basis to learn how to be a bit bigger and a bit more regional as a business.
So in your joint venture scenario, let's say a joint venture with a Southeast Asian or ASEAN country, what would be the role that Singapore businesses will play in the joint venture?
I think in a case by case basis, joint venture is just about two parties coming together that has complementary goals, complementary skills, and then aligned goals, right? So Singapore companies, I think one of the strength is technological ability and productivity and skill and competency. I think we're quite high, generally speaking, right? And depending on who your counterparty is, most of the time it will be where your strengths are. But in other cases, depending on who they are, it may be the other way around, right? So it's a bit hard to generalize. But if I had to, then I would say that it's around competency, skill, and the level of optimization that most of our companies are. One person do everything kind of situation, especially our SMEs, right?
I see. That's a great perspective. Thank you so much for your time today, Ang Yuit. Adelaide, do you have anything else to add?
Not so much to add, but I'd like just to ask in terms of any words for our business owners right now in this time. Specifically, I think it's really some sort of uncertainty going out there, right? Already, I think in the last year or so, we are already facing the slowdown and quite a few different sectors, even with our dealings with a lot of our business owners. We can sense everyone's fear and uncertainty as well. Of course, there's opportunity, but what are some words that you would have for our business owners out there?
I think these times are really situation changing, status quo changing. You as a business must be ready to dismantle your current business model and reorganize your business model. If not, at least optimize it further. So don't approach the current times with the mindset like when I'll do it when I have time, but actively set aside time to adjust to the changes that are coming that you would see if your eyes are open.
And one key takeaway that they can do immediately now, what would you recommend?
Get involved in understanding what's happening and the impact across the industry with all these tariffs and how trade is changing and supply chains, supply lines, supply systems are changing.
Awesome. All right, let's wrap up. Thank you for joining us on our first episode of the sub-series On the Ground. So see you guys for more ahead.
Thank you, Yit.
Thank you.